Okay. Good morning, everybody. This is the live market open for Wednesday, February 10th. I'm Yohay Elam of Forex Crunch and Market Movers podcast, doing the show as usual for FX Trade. Good morning, everybody. I see a few of you in the room. As usual, we'll talk about market developments, and there have been quite a few. Of course, we'll talk also about various charts and levels the next 24 hours, which are supposed to be the busiest this week. And of course, your questions. If you can't see the chat box alongside the video, the address here is on the screen for you to enter the chat, ask questions, and provide some answers. Good morning, everybody. So, yesterday we had more doom and gloom, I would say. Stocks all over the world remained under pressure. That happened in Europe. That happened in the United States, even though they didn't close that bad. And also we had falls in Asia. Now, part of Asia is closed, of course. China is still on holiday. It's the New Year. Celebrations all week. But this is part of the mood, of course. Oil prices finally joined the party and also collapsed. Okay, they lost the 30 line. They were battling the 30 line on WTI crude oil. Let's take a look at oil just to begin with, just to get the mood, the hang of things. So here's the spike we've seen last week on this talk about cutting oil production between OPEC and non-OPEC countries. And then we had one fall, another attempt to recover, and now another fall. Now we're already getting close to the lows seen earlier this year. That means the lowest levels since 2003 or 2004. Okay, so we're getting close. The line in the sand, I would say, for oil prices would be somewhere here, 27.50. Okay, we're above this line, but we're already trading at the 28 handle, and that means oil also began collapsing once again yesterday. And this has an effect, of course, also in the Canadian dollar. Before we talk about the loonie, let's talk about the world's most popular currency pair together with oil prices, and also the euro rallied. Okay, so first of all, we had the collapse of dollar yen, the strengthening of the yen, the safe haven yen, and the euro was sort of moving higher but hesitating under resistance at 112.15. Yesterday we had a big breakout, very nice one, and now we're trading on higher ground. And before we look at the charts, I'll just mention the big political event of the night. We had the outside candidates take big victories. That's Bernie Sanders in the Democratic Party beating Hillary Clinton. It was expected, but I guess a margin of 60% for Sanders against under 40 for Clinton was a big surprise. And Donald Trump took 35% against, well, he's the winner. He has many rivals there. The second one came John Kasich, maybe I'm not pronouncing his name correctly, took 16%, and then Ted Cruz 11.5. Anyway, this makes the story more complicated. We might have Michael Bloomberg joining the race. That's the whisper. Anyway, currently the internal American politics doesn't have an impact on markets, but this could certainly happen later on. So let's start with euro dollar. Okay, this is the 112.15 line I was talking about. Yesterday we talked about 112.40. Both lines were easily broken yesterday. Reached a new high of 113.40. Okay. Yeah, either way, the US is screwed. Yeah, American politics is a mess. Anyway, 113.40 was the high yesterday on euro dollar. Currently, we're under 113 once again, consolidating in range. Remember, the big event for today, we'll have a preview. Janet Yellen's testimony. This might be stopping big movements. Small slide of the euro this morning, just 5 pips. All in all, trading in range around 113. Levels to watch, I would say, still 112.15 and 113.40. Above that, we have 113.75 and 114.60. Okay. Yeah. We'll jump to dollar yen. Look at this collapse. Dollar yen is trading at the lowest levels since late 2014. Okay. Basically, since the last time the Bank of Japan intervened in markets, that was, the big QE program. The second installment of QE when they enlarged it quite a bit and they sent the yen shooting down, or dollar yen shooting up. Anyway, we found support at the moment at 114.20, but we're still hovering around the lows. The yen remains the safe haven currency of choice. Okay, so 115 works now as some kind of resistance. Remember, 116 was the line in the sand for the Bank of Japan to talk about intervening. Eventually, they did intervene with the negative rates, sent it all the way to 121.50, but then we had a collapse. Now, there are rumors in markets that the Bank of Japan is checking out prices in markets. Okay, I'm sure they're leaking it by themselves to sort of imply that that they're ready to act. Okay, to sort of encourage markets to sell off the yen, to weaken the yen before they actually need to intervene, before there is talk that the Bank of Japan will act in March or perhaps in April. In April, they have their semi-annual forecast. Anyway, lots of talk about intervention, or at least verbal intervention by the Japanese authorities. They're clearly unhappy with these levels, especially as oil prices are lower and Japan can afford a much weaker yen. Okay. Anyway, levels to the downside are levels last seen quite a long time ago. So I would say that if we break under 114.20, we have 113.15 over there, but with a more significant support line at 112.80. Anyway, resistance 115. Okay. So pound dollar managed to stabilize in range somehow. We had it fall from the highs, of course, but it managed to find some stability. Yesterday we had trade balance from the UK, which was actually okay. It showed a deficit of just under 10 billion, a bit better than expected. The pound is not going anywhere fast. No UK related figures. Of course, worries about global growth, the Eurozone, the referendum continue weighing, but the UK economy is still growing. Levels to watch here: 143.65, and to the top side 146.50. Further support 142.30. The Canadian dollar, after falling from heaven here at dollar CAD from almost 147 all the way to the 136 handle, we had a recovery. Yesterday, also with the fall of oil prices, we had it push a bit higher. Also this morning, it's just a bit higher. The Canadian dollar, despite this fresh weakness in oil, is still showing some kind of resilience. We didn't break yesterday above 140. Okay, we're still above the battle line of 139.10. We're still under this. Anyway, levels to watch: 140.50, and on the downside 137.87. Okay, so the Canadian dollar did weaken, but did show some strength. Aussie dollar still within the range. It did make this break yesterday under 70, the doom and gloom, but since then it recovered. Remember, Chinese markets are closed, so it's good news for Australia. Currently 70.88. This line here, 70.40. I think it's still a separator of ranges, but it's a bit weaker. 71.40 is somewhat stronger. Okay, then 72.20, and to the downside we have 68.30. Kiwi dollar, it did dip under 65.80, the line. It did find support beforehand, so when things got worse, it did make a dip, but it was a false break, and now we're back to the range 65.80 to 67. Nothing of importance from New Zealand. Dollar Swiss continued its fall. I think the Swiss National Bank got tired of intervening, and the Swiss franc is strengthening. 97.22 is the current level, much lower than parity. Anyway, this is a dangerous pair. Euro Swiss, look how, again, also the Swiss franc is strengthening against the dollar. I think that the Swiss franc is still some kind of a safe haven currency, and unless the SNB is intervening actively, the Swiss franc is strengthening. So we fell all the way from 112 to 109.79 at the just now. Back to the low ranges. I think 107.60 remains sort of the line in the sand for the bank of the Swiss National Bank. Okay. Euro yen. Here we can see the strength of the euro after a failed first attempt to break the strong line of 77.40. The pair made it, the cross made it. Next resistance is at 78. 78. 10 or something like that. Anyway, you reached. Sorry. Next resistance is 78.70, but currently we're still battling 78. This is an important line on the cross because this was very strong 74 line here. 77.40 was support back here in 2012 and also here in 2014. Next line was support in 2014. Now it works as resistance 78. 78.70. Higher than above that, we have 79.67, and well, let's see if we go that high. But anyway, we're seeing significant moves in euro pound. The pound didn't fall that much, but it was the euro that made a big break yesterday, and we're on higher ground. Finally, made the clear break above 77.40, very similar to the break above. With euro dollar above 112.15 and all the way to 113.40. Okay, euro yen. So this pair is well, it did fall back to the previous range, but now it's a bit above. It's a bit messy. So both the euro and yen. First of all, the Bank of Japan managed to weaken the yen, and euro yen went higher. Then the yen fell back down. Eventually, the euro did some catch up and it continued falling. Now we're sort of around hugging the 130 level. Pound yen is its risk off mood. After all this very strong move from the lows of just under 163 to 175, we're back down to 166.20 and something. 167 works as resistance, support 163.80. Okay, we talked about major pairs. We talked about you have any other pair you want to talk about? I think yesterday I mentioned CAD yen because I suspected that the Canadian dollar would do some catch up and the yen would remain strong. Oil prices did fall. The Canadian dollar did follow, but not in an extreme manner. So if we look at the daily chart, yeah, we had CAD yen extending its falls, but still finding support here at the 82 line. 83.30 works as resistance. 87, nice resistance. On the daily chart, this cross doesn't look that bad. On the hourly chart, it's a bit more messy, of course. But also here we can see a very nice range between 82 and 83.50. Okay, so this also reflects risk on, risk off, but perhaps not at the best. It's not at its best moment because Canadian dollar is showing some kind of resilience. Okay, let's take a look back at euro dollar. I want to see if I can have this. Why doesn't this work? Maybe it'll refresh. Chances for rate hike. I like this chart, but it doesn't work. Anyway, so what else did we have yesterday? Actually, all the figures yesterday were positive. UK trade balance was a bit better than expected. For the United States, the JOLTS figure beat with 5.6 million jobs in December. Remember, December was also a strong month. Remember, December, this is a lagging figure, but the Fed likes it a lot. Now, the Fed likes it a lot because it provides a broader view of the US economy. You can see there the amount of jobs opened, and I think more importantly, the number of quits, okay? When a person quits his job, her job, it's either for a better one or in general showing confidence. Perhaps not only a better one in terms of how the job feels like or the commute, but also how much the person is paid for doing the job. So it could also reflect an expected rise in wages, okay? So that's also a positive for the US economy, and that could affect Yellen's testimony today. That's what I want to talk about. let's begin with the main event for today. Janet Yellen goes to Capitol Hill. Freezing winter. It's also called the Humphrey Hawkins testimony, if you hear that on some publications. She first releases, the Federal Reserve first releases her prepared statement. Okay? So that's released exactly at 3 p.m. GMT, 1500. And that should have the main market impact. Then she begins reading the statement and then some Q&A. Q&A by politicians over there is mostly about these politicians wanting themselves to be heard, okay? That means they're not really going to ask real questions. And when they do ask questions, she's going to dodge the more sensitive ones. She's undergone preparations by experts. Anyway, what I want to say is that the prepared statement is the most important part. What are we expecting to hear from her? She's going to try to be as balanced as possible. About the US economy in general. Growth in the US economy is slower than expected. Okay? No doubt about that. We've seen that in the GDP figures. We've seen that in fresh figures for retail sales, manufacturing, you name it. On the other hand, part of this slowdown was not unexpected. It's due to a stronger dollar. It's due to the mining sector, the oil sector, which is investing much less. Part of it is due to a drawdown in inventories, which should be replenished later on, okay? So these are sort of the things that she can balance the economy. Talking about jobs, the first mandate of the Fed, okay? Or one of two mandates, inflation and employment. So employment is looking good. We've seen the last jobs report was great. The pace of job growth is slowing down, but that's because the US is getting closer to full employment, okay? And the JOLTS figure also showed that more confidence, people changing jobs. On the other hand, and also wages are rising. On the other hand, slower job growth could turn into eventually a fall in jobs, a danger of recession. First, the US economy slows down and even gets into a recession, and then jobs are eventually lost, but that happens with the lag. It happens only down the road. So that could be the negative part. Inflation, well, inflation is it's okay. If you look at core inflation, the official core inflation, it's 2.1%, but the Fed's core PCE price index is a bit worse than expected, okay? It's at 1.3, 1.4, under the 2% threshold. So these are the things that she could balance her statement with: inflation, employment, and the state of US growth. Now, the big question is, what will she tell us about the next rate hike? Markets do not expect the Fed to raise rates in March, okay? But there's still a small probability. We still have one more jobs report, a revision of the GDP, and many other figures until the decision in mid-March. The second thing, but according to bond markets, the Fed will not raise rates at all this year. Cannot show you the chart, unfortunately, but that's last time I looked, that's what it seemed. But I think she will leave the door open for one or two more rate hikes in 2016, perhaps coming in June. Now, she will not say anything explicit, but markets will try to assess it. I will also cover this event, of course. So let's see if we get some interesting stuff out of that. She talks also on Thursday. It's only Q&A. That could be interesting as well if she gets good questions. But it's an election year. Politicians want to hear themselves, not to ask real questions. And if they ask serious questions, she'll try to use the word "so" a lot. And on one hand, on the other hand, so I'm not sure we'll get real answers. Okay? Now, what does this all mean for markets? Currently, the market mood is horrible, terrible. Stocks are falling. Oil is down. Individual worries about Chesapeake, about them going bankrupt, about Deutsche Bank exposed to commodities, about it's not only good for consumers, the fall in oil prices, but could not only a result of high supply, but it could also hurt companies, investment, and the global economy. If she is positive about the U.S. economy, and if raises the chances of a rate hike, okay, then I think it could be negative for stocks, negative for the mood, good for the euro, good for the yen against the dollar, bad for all the commodity currencies and the pound against the dollar. Because if the Fed does raise rates, it's bad for emerging markets, it's good for safe haven assets. Okay, so I believe we'll have an extension of the risk off. If Janet Yellen goes dovish, like all the other central banks, and including some of her colleagues as well, the Bank of Japan acted and is willing to act again. The ECB said it's ready to act in March. Even yesterday, Jens Weidmann, the head of the Bundesbank, did not oppose more measures by the ECB. He aligned with Draghi. A hawkish member of the ECB went dovish. So she could go dovish, getting in, telling markets, okay, we have your back, no rate hikes, not in these words, but and that could sort of provide the mood for a relief rally. Relief rally would help stocks, would help oil, would help commodity currencies, would help the pound, but it would be negative for the safe haven euro and yen. Okay, that could be a sigh of relief for both ECB President Mario Draghi and BOJ President Kuroda, Haruhiko Kuroda. Okay, so if she goes very, very dovish, it would be positive for markets, negative for euro dollar. If she remains hawkish, we're still going to raise rates, then it's good for the safe haven currencies. That's my sort of two scenarios. The third scenario is she says something so confusing, and that's also a very realistic scenario. And then, of course, we get a mess. Okay, so that was a very long preview for Janet Yellen's testimony today at 3 GMT. Let's look at other events. We have also, after the show, UK manufacturing production. A more meaningful event than trade balance. Yeah. So we have it right here. We have actually four figures. The manufacturing production, which is 80% of industrial output, and industrial output. Okay, monthly and yearly. I think we should focus, markets usually focus on the month over month figure of manufacturing. That's expected to rise just a bit, 0.1 after a fall of 0.4. Okay, but I'm not sure where exactly we'll go. We need all figures to go in one direction in order to have a bigger effect. All in all, expectations are quite low. Let's say manufacturing production year over year is expected to remain negative, to show a drop in manufacturing, 1.4 drop year over year. In industrial output, it's expected to be a bit more balanced. Positive year over year, a small rise from 0.9 to 1%. Month over month, we're expecting very small changes. It's the last release for December. It's a bit lagging. So, but I think it still has an impact, at least an immediate impact on the pound. Remember that for the pound, we frequently see erratic movements just before the publication, in the sort of 15-20 minutes before the data is released. Well, now it's going up, but nothing substantial. Anyway, that's what we usually have. See your question about the Turkish Lira against the Japanese yen. Okay. Turkish Lira Turkey is an emerging market. Turkish Lira suffered a lot in the past year against many major currencies, such as the euro, yen, dollar, of course. I see it trading in range at the moment. Bigger trend has been, well, to the downside in the past year or so. We can put some lines here. This is a clear line on Turkish Lira. Sort of here, 43.50, and this used to be some kind of support, but we fell below this line already. So maybe 38. See here, nice ranges. That's true. You mentioned it has low spreads and nice trends. Okay. Had some trades on that pair. Two extremes. Yeah. Yeah. The Turkey is an emerging market, quite a big country. Yeah, and on the edge of Europe, between Europe and the Middle East, and it's suffered the global turn down, the raise in rates in the United States, and the Japanese yen, of course, is a safe haven. The last few days, of course, the yen is strengthening and the Turkish lira is falling. Okay. Any more questions? Let's see if we have any developments already. Oh, I didn't finish the events for today. So I have at 9:30 manufacturing production in the UK, industrial output altogether. It's one big report. Big event for today, Yellen testifies. So far, markets have moved according to mood. Now we have some sort of real event. This is a major event, a top tier event. Okay. And at 3:30 GMT, we have the weekly oil inventories. It's important to watch their two figures. Okay. The crude oil figures, and also the distillates, the refined, ready to use product. Okay. So that's also an important thing. And tonight, Japan also is on holiday, not only China. Let's see how that impacts the Japanese yen. Just something to watch out for. And you ask a question here about Turkey is close to invading Syria and probably parts of Iraq. Yeah, there is some talk because the Russians are helping the Syrian government, the Assad regime, to battle the rebels in the northwest of Syria, in Aleppo. So let me this is a map of Syria. So Aleppo is this town here. We have here rebels, some of them moderate. They control the city. They made advances. This area here by the sea is sort of the heartland of the Assad regime, Latakia. Anyway, the Russians are helping the government against the moderates. In this case, also against ISIS, but also against the moderates. And there are rumors that Turkey is on the verge of invading, also to combat the influx of migrants. Anyway, we're not talking here about dictator Erdogan is in panic. Yeah, he's been in power for too long. His secret, his secret oil theft from Syria is moving into focus. Yeah, remember this war is going on for 5 years already, almost 5 years in Syria, civil war, and of course it has an impact on Europe, on oil prices, and everything. Currently, it's still in the back burner, but it may come to the forefront. Sorry, I skipped here a question about euro pound. Okay, euro pound. Clear trend to the upside since we had those lows back in, when was that? Well, late last year. There are a few reasons for this rise. First of all, on the euro side, we have a few events pushing up the euro. We had the Draghi disappointment in early December. Markets had expected Draghi to do a lot more, even though he cut the rates from 10 basis points. Negative deposit rate is now minus 0.30 instead of minus 0.20, and talked about QE, sort of extending QE until March 2017 and reinvesting proceeds. That wasn't enough for markets. In addition, the euro enjoyed safe haven flows around the beginning of the year, and this continues. The pound, on the other hand, there are more worries about the EU referendum. We were seeing slowdown of the economy in the UK. And of course, the weakness of the Eurozone also has an impact. The Bank of England, of course, when Carney said that this is not the time to raise rates, it also, of course, had a negative impact. Now, on the charts, as I mentioned before, 77.40, very strong line. We had a big break above this line, looking to attack the next line, 78.70. We're not there yet. Next line, 79. 60 or 70, and above, I would say here, okay, the 80-40 line. Above this, we're already on very high ground. On the downside, I think, of course, 75 works as round level of support, and 76.60. Okay, so I hope this answers the question. Oh, thanks. You put here a map. I'll share it also with those not on the chat. Here we go. A map of Syria. It looks like a big mess, right? Because the red is the regime, but some areas are not fully controlled. Wow. Very interesting stuff. ISIS is the black part here, right? Anyway, it's a big mess. The eastern part, the bigger eastern part of the country, northeastern, is desert, okay? And most of the population is around Damascus and on the beach. Anyway, it's a very sad story in terms of people killed, internal refugees, okay, displaced people within Syria, and external. Yeah, a very interesting map. Thank you, guys. Any more questions? I'm looking here at the results. Clear victory in the New Hampshire. Yeah, clear victory is there. This is the map. Yeah, mass media would seldom show. No, I'm not sure. I have seen such maps in the past of the mess going on in Syria, but maybe not enough in detail. Not everybody understands the complexity of the conflict. That's for sure. So many groups there. It's not a colorful map for the sake of having a colorful map. It's really a very complicated conflict. Okay, question here about pound yen, euro odd, and euro CAD. Pound yen. Pound yen, as I said, 175 resistance, 163.80 support. These are really the big lines. 170 also, 172 are working there. This is the daily chart. The yen remains a safe haven currency and the pound is on the other side. I think there is a chance we might have the Bank of Japan intervening either by just selling yens, okay, or by announcing more QE in March and hinting about that in the next few days. They already hinted that they're checking out prices. So I believe we could have some kind of reversal, some kind of weakening in the Japanese yen. It would be easier for the Bank of Japan, for the government to act, not now when the mood is so gloomy, because it's very hard to fight markets, but to wait a few days until things stabilize and then to hit the yen when it's slightly weaker, not when it's this strong. Okay. For the pound, we don't have any main events, so I think the next movements will depend more on the yen. I think eventually we'll see some stabilization and a move to the upside. Levels I pointed out here, must say it looks a bit more messy, but 172, 175 on the upside, 168, 60, 163, 80 in any case is very, very strong support over there. Okay, Euro Aussie also interesting pair because it's the risk on, risk off again. The Euro is a safe haven and the Aussie is a risk currency. Where did that chart go? Right here. Okay, but the movements here are not as strong. Yes, the euro is stronger in recent days, but the Aussie did manage to stabilize. Some lines here are a bit old. Very important line, 152.50 to the downside. This has become a bit irrelevant, I would say. I see this spike here above 160.70 as a false move to the upside. The high so far, the high was 161.50, but I think it's a false move. I see stronger resistance here at 162.30, and 165.80 is even stronger resistance. This line is minor support 153.25. Stronger support I see here at 152.30. Okay, this could work as a pivotal line, but not so strong. Here, right here at 156, also around number. The big event, well, China is on holiday, and this could enable the pair some stability. And also, we'll have to wait and see for Draghi. I think next week we could have a resumption in the fall of the Aussie because of bad news from China. And then, but in early March, we could have the ECB acting, and that could rebalance things once again. Currently, the trend is still to the upside because of the bad mood, which supports the euro and weighs a bit on the Canadian dollar, Australian dollar. Already jumped to the next topic. EuroCAD. Also here, same trend to the upside. Stronger euro, safe haven, weaker CAD. Falling oil prices. 157. Bit more messy. 151, I would say, is support. Rest of the lines here are a bit more messy. I think Euro Aussie looks better than Euro CAD. No, on the hourly chart, it doesn't look that bad. 154.50. Maybe this is already obsolete, but maybe, yeah. These lines are a bit more relevant. Strong support, 151.50. Now we're seeing the pair fall quite a bit. So I would say it's due to some stabilization in oil prices at the moment. No, oil prices are not. Yeah, oil prices are moving a bit higher, and the euro is weakening just a bit this morning. Also, yesterday morning, we've seen this sort of correction in the morning. So the euro is going down a bit. So is the yen. Oh, yen not so much, more the euro. Some kind of correction, some kind of better market mood in the European Open. We've seen yesterday, it certainly did not last, okay? Pound dollar, confusing. Well, I think the technical lines for pound dollar are a bit less confusing than they used to be, but we have a mess in this pair because it's not, the safe haven. Of course, it belongs to the commodity currency pair group. We have the UK industrial output to set the tone for the pound in the next hour or so, and then it returns to market mood. 143.60, 146.50, and 142.30 are lines to watch. Sanders in front of Clinton, a silver line on the horizon. Yeah, he won in New Hampshire, and he's from Vermont, so he was expected to win because he's well known in Vermont. Of course, Clinton is much, much more well-known nationwide. She's been Secretary of State, Senator, and First Lady. The next battle is South Carolina. I think it's next week, or Nevada. Not following it that closely. Of course, following it closer to the event. And there she has a much, much bigger chances to win, according to all analysts. It's not his home ground of Sanders, but her home ground. But I think that he wasn't expected to win in New Hampshire with such an outstanding 60-40 margin. Okay. Anyway, this is the if you read analysts about the New Hampshire elections, the sort of bottom line is mainstream establishment out, newcomers in. Of course, Sanders is not unknown, and Donald Trump, of course, also is quite known. But anyway, both of them are sort of anti-establishment, and that's why there's a chance that Michael Bloomberg, former mayor of New York, founder of all-powerful media outlet Bloomberg, will join the race as sort of the middleman. Okay, all right, we talked a lot about politics, about American politics, about Syria, also about charts. Let's say wrap up for today. This is the wrap up for the live market open for February 10th. It's a Wednesday. Today's big event is Janet Yellen talking. Janet Yellen talks on the background of a dark market mood. It wasn't that terrible with American stocks eventually stabilizing, but things don't look good. Safe haven currencies are in demand. Euro and the yen are higher. Oil prices joined the party and collapsed under 30. They haven't reached the lows of the year, of the decade of 2750, but they are certainly suffering. What we had yesterday was actually better than expected figures in the UK. JOLTS, which is good for the Fed, which provides some encouragement. Also in Australia, it was okay. Let's talk about the big event for today. Janet Yellen testifies 3 GMT. First of all, the prepared statement is released. That means we'll have all the data. We don't really have to listen to her speaking. And the questions and answers in an election year are not that important. So her statement should be relatively balanced, talking about, on one hand, the US economy slowing down. On the other hand, it's still growing. On one hand, jobs are rising, but at a slower pace. On the other hand, inflation, depending on which measure, it's improving, but not as fast as they want. Inflation expectations are stable. The big question is, what will she say about rate hikes? Her goal is not to say anything clear. I think she will eventually leave the door open for more rate hikes this year, but not in March. That means that if she's very hawkish, talking about leaving the door open even for a rate hike in March, that could be positive for the dollar against commodity currencies and the pound, but negative against safe haven currencies such as the euro and the yen, because markets do not want hawkish statements. They want all central banks to go dovish, and that would help the safe haven currencies. If she joins the dovish chorus, like we heard from Carney of the Bank of England, the Bank of Japan, the European Central Bank, and everybody else basically, then I think we could have weaker euro, weaker yen, stronger commodity currencies. Also watch out for oil inventories. They're expected to rise once again, but it's not only crude to watch, but also distillates. Let's look at a few charts. Euro dollar made another big break yesterday, going all the way to 113.40, which remains resistance. I look at 112.15 as support. Further resistance to the top side, 114.60, to the downside, 110.70. Dollar yen, slight recovery, but all in all, the yen is the king, despite talk from that the Bank of Japan is looking at prices. 114.20 to 115 is the current range. 116 is resistance. 112.50 maybe support. But we're back to levels seen a year and a half ago. Pound dollar, the big event for the morning, for the pound, of course, is release of manufacturing and industrial output. 146.50 is resistance, high resistance, maybe 145.50 in the middle. 144.50 is support, followed by 143.65, which worked very nicely. Dollar CAD did show some resilience despite the falling oil prices. Now oil prices are slightly recovering, and so is the loonie. 137.87 is support. 139.10, weak resistance. 140, 140.50. Resistance, Aussie dollar back above 70.40. 71.50 remains resistance. 70, despite the breach, is still support. Kiwi dollar 65.80 to 67 are the lines to watch. Okay, I see here another question before we head off. Have you heard what Albright had said? There is a place in hell for all women who do not vote for Hillary. That way you surely lose voters. Yeah, I certainly agree. I mean, you can be a woman and vote for a man, and the other way around. And I don't think Sanders has a bad record in terms of women's rights. So Donald Trump does have a bad record. I can't understand a woman voting for Donald Trump, but a woman voting for Bernie Sanders makes perfect sense to me. So anyway, we've seen that gender doesn't matter. I mean, it wasn't in the last primaries women voting for Hillary Clinton, and men voting for Obama. It was much more complicated picture. It's about policies, it's about charisma, it's about so many other things. So it's much more messy. Okay. Anyway, political scene in the United States will accompany us for some time because the political process is extremely long. For currencies, the mood is still negative. Let's see if it improves. Everything depends on Yellen today. If she goes dovish, good for stock markets, good for oil, bad for the euro and the yen, good for commodity currencies. If she keeps banging the drum of raising rates, bad for commodity currencies, stocks, oil, good for the euro and the yen. That's sort of the bottom line, as I see. What about Ted? Who's Ted? Anyway, Ted Cruz, right. He finished third, which was a relatively positive result for him, 11.5%, I see here. He's also quite extreme. He says he's anti-establishment, even though he's part of the establishment. Anyway, we'll have a better picture after Super Tuesday, I think, in early March, when we have many states voting and many candidates quitting. So it'll become a much tighter race. Okay. Anyway, that's it for today. Thank you very much, everybody, for coming, for great questions. And see you tomorrow. We'll digest Yellen, see what the markets give us. We have quite a lot of volatility, which is good stuff. Okay. So that's it for today. See you tomorrow. Bye-bye.